This is the third of 4 tutorials to help you build financial plans, specifically to help you with assignment 12. In this tutorial, we'll be talking about analyzing cost structures for your profit and loss. So one of the things that you need to do once you've built up your revenue forecast is you'll also need to build up a forecast of your costs. So one of the ways of doing that is what's called a bottom-up model. And this table that I pulled from the textbook gives you a good example where what you do is basically list all of the assumptions that you have about costs for your business. This is a good place to start, but it's not the only thing that I recommend that you do. What I also recommend that you do is compare the costs that you end up with the typical ratios for similar companies. Why should you do that? One of the primary reasons is that you don't necessarily have a lot of experience in this industry, and you could be missing major categories of costs, or you could be misestimating some of those costs as well. So what I recommend that you also do is you find the percent of revenues spent by other companies that provide a similar product or service. When you do that, then compare those percent of revenues to what you think you would spend in those same categories. And then if there are any differences, make sure that you can justify those differences. One of the things I've done to help you is based on what you did in the last homework assignment where you found 10Ks for your industry. I found some additional ones. I also made sure that I had all of them in PDF format, and I've loaded the list that you see here in PDF format into Canvas. And there's another page on the assignment where you can basically click on various links, and then you can see each of these 10Ks. So that should help you find the information for other similar companies in your industry. What do you do with that information? We'll be using it in several different ways, but in particular for this assignment, what you need to do is go and look at the income statements. For example, here's an income statement for a company called Fox Factory that produces components for the bicycle business industry. And in there you can see that they have their sales, their cost of sales, their gross profit, various kinds of operating expenses, which then gets them to total income from operations, which then allows them to calculate various other things to ultimately get to a net income line. In the fourth tutorial, we will be talking more about how you can create this yourself. But for now, just be aware that almost all financial statements are written, or almost all income statements are written in this particular way. And this is the format in terms of the categories, the typical categories that you should be using for many of these things. Also, what you want is not just the number, you also want the percentages. In this particular case, the 10K provided both. They did it on 2 separate tables. I think it's actually easier if you put it into a spreadsheet and you put it in columns next to each other. Here is an example of where I've done that with the main categories that I would want to make sure that you have. And this has been done for Tesla versus General Motors. Now, one of the interesting things when you look at this, and this is 2017, but 2018 and 2019 are going to show you almost the same type of thing. If you look at the cost of goods sold as a percentage of revenues, for these two companies, they're almost exactly the same. And that's what you're going to find. Companies that are in the same business area will typically have some of their ratios that are the same. And this is a very common one because in the automotive industry, basically the cost of producing a car is about 80% of what the company gets for selling that car. So that's a very useful thing to know because it applies pretty generally in that industry. And those percentages are going to be very different depending upon the industry that you're in. Now, when you look at the categories between gross profit and earnings before interest and taxes, you'll see that there are huge differences there between Tesla and General Motors. In particular, Tesla is spending a lot more money on research and development, selling general and administrative costs. The research and development that General Motors is doing, I believe, is actually lumped in their selling general and administrative and is very low relative to the revenues that they have. So what you're seeing there is Tesla is a company that's investing very heavily in technology where General Motors isn't. The result of that, at least in 2017, was that Tesla was losing a lot of money and General Motors was actually making money. Now, in 2020, Tesla is starting to be able to also make a profit, but they have a different concentration in some of those categories. That's where it's very useful to look at some of these and start understanding how it works in your business. So that's everything that I wanted to share with you in this tutorial. The key thing is take a look at some of the 10Ks that are there and start using them, because I think you're going to find them useful in terms of understanding how your industry works. So when you're ready, go ahead and go to the next tutorial.